Welcome back. In my previous video where I shared about having strong sponsors such as CapitaLand and MapleTree, we'll be able to tide through a higher interest rate environment. I have done a video on CapitaLand Integrated Commercial Trust, and here I will share with you another REIT under the MapleTree family, MapleTree Industrial Reit. How did MapleTree Industrial Reit perform in the first half of financial year 2022, and what is the outlook moving ahead? Before we start, do note that this is not financial advice and do your due diligence, and more important thing is to hit the like and subscribe button. If not, Atan will be very sad because he likes MapleTree, I mean the real tree. Okay, let's come back to the performance of MapleTree Industrial Reit in the first half of 2022. For the first half of 2022, we can see from the income statement while the net property income increased by nearly 16% compared to the first half of 2021, the property operating expense increased by nearly 42% and borrowing costs also increased by 34% approximately. The increase in DPU was a divestment from one of the properties, which is about net gain of 15.7 million. We know that interest is rising. As such, we do expect costs to increase quite significantly as well. As of 30 September 2022, the net asset value of MapleTree Industrial Trust stands at $1.93. As cost borrowings increase, we want to know how well MapleTree Industrial Trust is doing in terms of managing risks. From here, we could see that MapleTree Industrial had managed to keep its total loan 74% fixed rate as of 30 September 2022, and the loan tenure averaged 3.5 years. This provides a good hedge in terms of uncertainty, where interest rate if continues to rise, the distribution per unit will be reduced at minimum rate as far as possible. MapleTree Industrial Trust mainly consists of 6 property segments with more than 50% in data centers. This stands about half of the 8.9 billion AUM size. There's huge potential in this segment, as this article shows that the global data center market is projected to achieve with a value of 517.17 billion in just 10 years, with a 10.5% compound annual growth rate from 2021 to 2030. Canada ranks the world's 5th largest data center market with over 300 sites. Almost half of these are located in Toronto, making it the largest slice of the Canadian market. The occupancy rate of the overall portfolio is 95.6%, slight increase from the previous quarter. According to this research done by JLL for Atlanta, the vacancy rate has fell to 4%. The absorption rate will be boosted with the move in demand. Of course, one main concern will be the bulk of borrowings are US dollars, and that is because the coverage for data centers in US is 50%, which is also half the AUM size in MapleTree Industrial Trust. The weighted average lease expiry in North America is 6 years, which is well supported with large and diversified companies. With about 33% weight in the info communication sector, will we see a slowdown as recent news of tech layoffs flying around? The retention rates in Singapore is healthy, with more than 60% listed with more than 4 years. Apparently, the data centers lease is not up for renewal, which also means data centers in Singapore could have leased the space within the 2.6 years of WALE in Singapore. In summary, when you are investing in MapleTree Industrial Trust, you are essentially investing 50% data centers in the US and half of the AUM coming from there as well. The key component will be how well does the growth of data centers and related sector move forward in 2023. With that, do like and subscribe to my channel, and I shall see you. Adios.